to be attempting to answer on today's live stream for the premium members. Sorry for any confusion with me going live for about half a second before going live right now. I am, due to just how the stream is set up, I'm not going to be able to see the chat box. So if you're in the YouTube and you attempt to leave a message, I'm not going to be able to see it. But after this live stream, we're going to go into one of the lounges, the premium lounges, and we're going to discuss our thoughts on HBAR together. Give me 1 second while I make sure that we're live, because it's not live on my phone yet. There we go. Okay. HBAR. HODL or FUD? That is the real question. That is what we're going to attempt to answer today. I have a lot of notes and a lot of things to get into, so we're going to get straight into it. So first off, HBAR is not a blockchain, but that begs the question then, what is HBAR? If you were here last week when we researched Caspa Crypto introduced the idea of a DAG for us, an alternative to a blockchain. See, a blockchain is exactly what you would think it is. Hopefully, at least everyone is fully aware on what a blockchain is here. But a blockchain is a series of blocks in a row, one at a time. A DAG, or the technology behind HBAR and Caspa, is a graph. I could sit here and explain it to you, or I could simply play this YouTube video from HBAR that explains it.
Is a public distributed ledger that maintains the highest standards of performance, fairness, and security for decentralized applications at internet scale. Hashgraph is the underlying consensus algorithm that achieves high performance and absolute finality. So how does Hashgraph actually work? Suppose we want to create a type of auction that, unlike traditional auctions, is able to operate without a central authority controlling and managing a ledger of transactions. Instead, we want all participating parties to publicly maintain a distributed ledger on their computers, which we call nodes. We need a way to ensure that every node can reach consensus on the current state of the ledger and the exact order of incoming transactions. We also need a way to ensure that bad actors cannot inappropriately manipulate the system. Within the Hashgraph framework, the nodes share information with one another via a gossip protocol, such that news of new transactions spreads through the community quickly and with resilience to any small number of nodes being offline. To share transactions with the community, a data structure containing a payload of those transactions, a timestamp, a digital signature, and 2 hashes pointing to earlier gossip structures is created. The sharing of this information is a concept unique to Hashgraph called gossip about gossip. The nodes are not just sharing what, they're also sharing who and when. This trail of information means each node knows what another node knows, when they found out about it, and who they found out about it from. This allows the nodes to locally engage in a virtual voting protocol unique to Hashgraph. Without communicating with one another and consuming bandwidth, mathematically rigorous voting algorithms are used by each node to agree on the order of transactions, and so how to apply them to change the state. In order to achieve a decentralized market, we need the ability to order ultra-high transaction volumes in real time. Only Hashgraph can guarantee performance, security, and fairness for these types of distributed applications.
Of course, I will be putting this in the Discord after the fact, just in case the audio quality wasn't there. You saw me duck down and check my phone to make sure that it was playing accurately. So this seems to be the way that many blockchains, not blockchains, right? Not blockchains. It seems to be the way that many cryptocurrencies are starting to move going forward, because with something like a hash graph or the gossip protocol here in Hedera's case, in HBAR's case, not every node, not every participant of the network needs to have a complete history of the network. That was something initially that was bogging down Bitcoin. They ended up creating light nodes, if you're familiar with that. We get into the weeds really quickly here, but essentially they're only maintaining the history that they need to maintain in order to get to that point in that chain's history. And then they are able to just merge together. So anytime you need to check to see if a transaction is valid, you just check all of the different nodes, all the different gossip mechanisms that have information about that transaction. That does not mean it's going to be all of them, but it's going to be a majority of them. So this is what drives them to be able to say that it is the solution to the trilemma. Remember, the trilemma is set forth by Vitalik, creator of Ethereum, where you are able to pick two out of these three things: scalability, decentralization, or security. Every single cryptocurrency is going to claim to have solved all of these, so it's up to you to kind of decipher for your own purposes to see if they did it in your book or not. I did not mean to move that forward, but here we go. So the first is scalability, and I had a bunch of animations that I spent time doing, so you can see fly in from the right on click. Unfortunately, when I go full screen, it cuts part of it off just because of the way that I'm displaying my screen to you guys. It might not be too bad, but we're just going to keep it like this, and you're going to miss out on the animations. So scalability. You can clearly see right here the Generation 3 blockchain, according to Hedera Hashgraph's own words, they are Generation 3. Ethereum was Generation 2, and Bitcoin was Generation 1. This is not a new concept. HBAR is able to withhold up to 10,000 transactions per second, compared to 12 for Ethereum, 3 for Bitcoin. The fee is fixed at 1/10 of a cent. So that is something that's unique and very interesting for HBAR. But it does bring a little bit of a concern moving forward, because what's the incentive once all the coins have been distributed to continue to mine? They need the value for a coin to be worth it for the miners, right? The validators. And it's proof of stake, so we get into it. I'm sure they have a solution. I couldn't necessarily find one. But it's extremely cheap, right? The finality is 3 to 7 seconds compared to here. You can see it takes up to an hour on Bitcoin. That's why they need the Lightning Network. And then we have energy consumption. These are all self-proclaimed claims. This doesn't mean that it's true. And in fact, they need to be proven in real life. You'll see explicitly that 10,000 transactions per second is not what HBAR is doing right now. So we'll go to HBAR's website, Hedera's website, and they actually put it right on the front of their website for you, because again, this is all stuff you can go validate on your own in their block tag. But they do 84 million transactions in the last 24 hours, and this is growing pretty quickly. I will be completely unbiased here. When I did the research initially, like 3 or 4 months ago for HBAR, they were at like 50 million transactions in the last 24 hours. Doing out the math, this comes out to be about 1,000 transactions per second, which is very impressive, but not at all the 10,000 TPS. And that's just because there's not enough transactions to warrant getting up to 10,000 transactions per second. I don't see any congestion necessarily happening in the network, but it does mean that there just isn't enough transactions. There's not enough of a need. The consensus finality is really cool. It seems to stay around 5 seconds, which is good. We don't want to be sitting there for 10 minutes waiting for a transaction to go through. Average cost. And the energy consumption is very low today. Yesterday, when I was putting some of these slides together, the energy consumption was actually 10 times higher than what it was saying here. So, food for thought. Decentralization. HBAR. This is where it gets kind of wishy-washy. This is where some opinion gets into it. Before we go super in-depth on the decentralization versus centralization of HBAR, I want to propose to you the idea that it's not black and white. That things can be centralized and decentralized at the same time, just compared to what you're comparing it against, right? I've done this example a couple times, but if I have 2 pens in my hand together, they are now centralized. If I throw one across my room, now they're decentralized, right? But they're not. They're still both in my room. So it's a spectrum. There's different levels of centralization versus decentralization. Now I have to go get my pen. HBAR is more centralized than many other blockchains, but it is still decentralized on that scale, okay? Why do I say that with such confidence? Well, there's a governing council that is in charge of everything for HBAR. They're in charge of everything, consensus, governance, all of it. And because it's a delegated proof of stake network, you can stake your HBAR, but you have to delegate it to one of the node operators, and all of the node operators are on the council. It's a permissioned node system. So right now there are 29 different council members, and they range from Boeing to Dell to LG, Google, IBM, UCL, a lot of really recognizable companies, a lot of really recognizable names on this list. There are 29 out of 39 seats. The idea is that once they reach all 39 council members, they will then decentralize the ability to host a node, and many more people will be able to host nodes. It won't be entirely up to just the council. And again, if you guys are just joining right now, I'm keeping it concise for anyone who's watching over the stream at a later date. I don't have the comments popped up right now because I want to go through it, and then we're going to go hang out in one of the classrooms or in the lounge, and then we'll talk about HBAR a little bit more in depth. I just want to save everyone's time if they're rewatching this at a later date. Each council member cycles through a term. They're allowed to do 2 terms in a row, and then they must take 1 term off before they have the option to come back on and serve another 2 terms. A term is 3 years, so they are able to stay on the council for 3 years. That does, in my opinion, lead to some shorter term decisions being made. 6 years is not that short of a term, right? But if they know that they're only going to be here for 6 years, they might be incentivized to make some poor decisions for HBAR. They might try and dump a bunch of tokens on the market while they're on their right. They might, while they're in position of power, they might try and convince everyone that it's time to pay themselves a little bit extra in the tokens and dump some on the market, and then take out some money, and then just destroy the project in the longer term, like, right, not have a long-term outlook. Not saying that's definitive, it's just a risk factor. It's something you have to be paying attention to. You cannot ignore things like that. Let's see, I have notes here just in case I forgot anything. Yeah. So it is more of a centralized project than a decentralized project, and that's good and bad. Security. Now, this gets pretty in-depth really, really quickly. You don't have to know how all of this works. Just like the vast majority of people who use their email or use the internet have no idea how it works, you can use something and not fully understand how it works. But you are opening the door to a little bit of risk if you aren't understanding it. Hashgraph relies on an asynchronous Byzantine fault tolerance. Essentially, what I want you to get from this is that rather than a 51% attack on most blockchains, where a malicious actor needs to gain control of more than half of the network in order to carry out an attack, HBAR, you only need a 33% stake attack. So if a third of the currently speaking, in its current situation, if a third of the council members decide that HBAR needs to do something in favor of the council members and not in favor of the token holders or the coin holders, they can do that with a third of the control. Malicious actors only need a third of the stake, so a little bit sus. Speaking of security, yes, it is one. Ah, you like that transition? My entire presentation was actually completely designed around that transition right there. So I'm glad I nailed it, boys, and that one lady who's watching right now. So is it a security? In my opinion, absolutely it is a security. I don't see an argument where you could make that it's not a security. However, the SEC did not list it in their recent list of 67 securities. So food for thought. In my opinion, it circles back to the council. Some of these names must have some pretty strong lobbying power at the SEC, but that is conspiracy. The Howey test. Why do I say it with such confidence that this is a security? The Howey test. So, was there an investment of money made in a common enterprise with the expectations of profits derived from the efforts of others? That is the Howey test. If the answer to that is yes, it's a security. This is how the SEC, this is how regulators have set out to determine if something is a security. It's going to get a little bit more nuanced as we progress further, as it should be, right? But for now, this is it. So, an investment of money. Let's just look at this real quick. We'll just go ahead and look at this link that I provided here for us. When Hedera, the company that is controlling HBAR, hold on, take that out, cut that out. When Hedera, the company that has patented the technology that HBAR runs on top of, Hedera Hashgraph is patented by Hedera Hashgraph, the company. when they were raising funds, they were issuing something called a SAFT. A SAFT is a simple agreement for future tokens. They offered many SAFTs across 3 series of fundraising. These are investment contracts. SAFTs are investment contracts. And so people who were able to invest into this company were given the rights to a certain amount of HBAR coins at a future date at a specific price. It sounds just like an option contract or a warrant. It's exactly what it is. So I think that any argument against it being a security goes down the drain when you introduce the fact that they issued SAFTs. Also, the fact that the company is based out of Texas, Dallas, Texas. I think the company itself is in Delaware because that's where the most advantageous business regulations are. If you look at most publicly listed companies in the stock market, they're all out of that same state. I believe it's Delaware. Fact check me on that. Most of them are out of that because they're super advantageous for companies, but the founders are in Dallas, Texas. Regardless, there you go, an investment contract. And even just further, we'll ask Merlin, which is an artificial intelligence plugin. So what is a SAFT? Hopefully it gets this. Yeah, a simple agreement for future tokens and a type of legal agreement between investors in cryptocurrency companies or blockchain platforms. I don't think I need to spend any more time on that one. In a common enterprise, well, yes, they were investing directly into Hedera Hashgraph, the company, with the expectations of profit, to be derived from the efforts of others. The efforts of these companies, governance has been passed on to the hands of the governing council, so yes, it's a security. Red flags, it's a security, and there's a governing council. At the same time, that makes me a little bit bullish on it because unlike many different cryptocurrencies out there, well, I want to hold off on that actually because we're talking about red flags right now and I shouldn't try. Yeah, we'll keep it there. It has a council. The fee structure after it's been decentralized, I don't see how it's going to merit people continuing to stake their HBAR to validate the network because the fees just likely aren't going to be there enough to run a delegation pool. The fees are set to such a small amount they would need an extraordinarily high transaction throughput to make it worth someone's while to set up a node, in my opinion. We'll see. The governing council has the ability to change that. They can alter the roadmap at will. So, well, not at will. They have to agree on it, but the other thing is there's no forking, and that could go either way. Realistically, the network can't fork. That could go either way. Algorand can't fork either. I still kind of like Algorand, but the council here. Oh, I don't even remember the tangent I was going to go on. I should have just gone on it. Oh. While the council is a red flag, and it's a pretty big red flag, it's also why I'm kind of bullish on HBAR. Because rather than just having a decentralized group of random people contributing to the development and steering a massive ship with the intent of having corporations and countries utilize the technology, rather than steering a ship blindly, we're having a group of people who are ideally going to be using the technology in the future, steering it and creating a technology that's going to be the most useful for them. So I think there's a clearer objective for what HBAR should become because of this council. We'll see moving forward, but it is definitely, there's some red flags here. The tokenomics, the dilution, that is one of the biggest red flags. Not so much anymore, but in 2 years, the supply went from 6 billion to 30 billion. They do have a maximum supply of 50 billion, so that is good. But during the last 2 years, during those 2 years of massive inflation of the token supply, what is that? 6 billion to 30 billion, that's a 5x, correct? A 4x, whatever, a 5x. That's insane. That is an insane amount of tokens to be pumped into the market. And you can actually see it on Masari. The exact repercussions of this. This is why when I initially looked into HBAR, I was like, hell no, look at how bad that is. Anyone that I've made a video on this and it triggered a lot of people, but I genuinely feel bad for anyone who's been holding HBAR for over 1 year because you were diluted out of existence. Look at this, okay? Back here in 2021, January 2021, there were 6.7 billion circulating supply. Now it's 31.6 billion circulating supply. That's a massive dilution. And at the same time, if we go to the market cap, this is just to highlight why you need to pay attention to this kind of stuff. You need to highlight, or you need to pay attention to this because it impacts your investment. Maybe not so much in a bull market. Everything goes up in a bull market, but if you're going to hold something for the long term through a bear market, you need to be aware of these downsides, of the implications of dilution or inflation. If we look back here, okay, February 20, well, let's make it a little bit simpler on me right here. The circulating market cap back here on June 21st, 2021 was 1.56 billion. The token price was 18 cents, okay? Remember those numbers. 1.56 billion market cap, token 18 cents. Currently speaking, the market cap is 1.4 billion. The token price is 4.4 cents. So the market cap is down 10%, 8%. Is the token price down 10 or 8%? No, the token price is down like 75%. The token price has been slashed. That's because of the inflation of the token supply. So you have been holding it for 2 years and the market cap didn't change. So the price of the company, the price of the project didn't change, but the price of the token changed. So hopefully all you guys took that at heart. The initial distribution or the initial allocation of HBAR. Before I move on, I should say that because the maximum supply is 50 billion, where'd it go? Because the maximum supply is 50 billion and we're already at 31.6 billion, that means the inflation is done. It's still going to have some inflation, right? Because they have to go from 31 billion up to 50 billion, but you can't increase another factor of 5 like they did over the last 2 years. So it's not a concern for me anymore. The allocation of HBAR is kind of intriguing. It just speaks to the fact that there was levels of investment contracts here. So the allocation, we had 7.7 going to the initial development and costs and licensing, 22% for purchase agreements, which are those SAFTs, 14% to network governance and operations. Remember, the governing council's in charge of that, so that's their slice of the pie. Ecosystem and open source development, the council gets to determine where that goes, but that is for the community. And then 31%, again, the council gets to decide where that goes, and that's the unallocated supply. That was at launch. So things have changed now. This was initially at launch. We got the purchase agreements, the network governance, ecosystem. So the ecosystem and open source development include all HBARs released to the community for furthering the decentralization and development of the Hedera ecosystem. The community incentive program and developer grants were early programs designed to incentivize testing of the HBAR network and jumpstart development of essential applications. So good, I like that. They were incentivizing people, but centralized. They put together for you so you don't even have to worry about going after it and trying to figure it out, because this is a company, this is a well-organized company. They put together the emission schedule for tokens. So we're in Q3 of 2023 now, but they have theirs for Q2 of 2023 out. And you can go through and see like how many coins were issued due to purchase agreements, the SAFT fundraising. So a big unlock just happened. If you go back to this token supply, you can kind of see that like, hey, over the last year, we've had a lot of unlocking happened. It's here. The network governance and operations. So they are spending an excessive amount on network governance and operations, which is good. They're driving home the use case, right? They're driving home some extra adoption. So just things you can pay attention to. You kind of get like a status report from the treasury management reports that they put out. And wrapping things up a little bit, I have 2 more slides here. First, I'm going to skip over that one because I want to show you guys this. I think it pieces together pretty well. You notice how we can see right here, this is next level due diligence. So the network and governance operations, how 348,000 coins in Q2 of 2023 were allocated towards that. Did it have any implications? Did it have any impact? Yeah, it did. Look at how many wallets here, the account's growth that happened. So even though the token was not spiking during this time period, the price, because that's usually what drives adoption, is the price appreciation and the speculation, we had extra accounts being generated in Hedera Hashgraph's ecosystem due to that extra allocation of tokens. You can see how it's piecing together. You're kind of like digging deeper to see why something's happening and not just taking it at face value. It's fascinating, right? HODL or FUD. The governing body is both HBAR's Achilles heel and the reason I'm bullish on it. I think I've outlined that pretty clearly. I can't personally make it a large position in my portfolio, but in my bag holder to homeowner portfolio challenge where I'm taking $500 and turning it into a house, I have a position. I bought 650 Hedera. I bought 650 HBAR, which came out to like $30. I think I'm up like $2 on it right now. I think the risk to reward is there for my account. Tinfoil hat. Are you guys ready? You guys ready for this? Thank you so much. If you're here right now, thank you for sticking through this. This has kind of been a long presentation. Didn't expect it to take half an hour, but there's a lot of things to talk about. I honestly didn't even cover everything, but get your tinfoil hats on because the World Economic Forum issued an insight report June of 2023. Let's just go ahead and Control F Hedera. Hedera was mentioned 6 times in this report. Monique is an independent board director. Hedera. She is part of HBAR's community. I forget what role she has, but she is I'm going to butcher that word. She's part of the community. You can keep going. This is for the digital identities from the World Economic Forum. So we have Alex, Chief Information Officer, Hedera. We got Nilmini. Just different people that we could look into, but the fact that they are mentioning Hedera in the World Economic Forum's report on digital identities is very intriguing. This is not the only cryptocurrency, blockchain, block DAG technology that is listed here. I forget who else it is, but ETH's not going to be a good word for it. There are others. They're also listed. I should have remembered. Damn it. Algorand, Polygon, there we go. Massa protocol. So they listed a lot, and to be completely fair with you, like Cardano, WEF. The World Economic Forum has pages on many different blockchains, right? Cardano development. They definitely have one for Ethereum. Ethereum WEF. Ethereum merge and what it means for the crypto industry. So it's not unheard of to have this organization talking about cryptocurrencies, but it's cool nonetheless. You don't see Dogecoin. You don't see Pepe. Well, wait, hold on. Imagine Dogecoin, cool. Pepe, beautiful. I'm curious because I would be very disheartened if Dogecoin World Economic Forum. No, just blockchain. Phew. All right, cool. That's my presentation for you guys. I do have a request which we will talk about more in the Discord right after this. But I am attempting to put together a list of layer 1 protocols based around certain factors for valuing them, okay? So I will go over it really quickly here, but this website that I found here, at Metrica, I haven't done a lot of digging. They only have a couple cryptocurrencies listed so far, but they provide specific metrics like this. So if we change this to 1 month, why was my breathing so scary like that? God damn. So the active accounts for HBAR are 315.6 thousand. Have you guys heard of Metcalfe's law? It's a way of valuing a network. So the square of active users in a network, or the square of total accounts of a network, is directly proportional to the potential value of that network. What I'm trying to do, and we will discuss it further, is take the squared number of users, divide it by a cryptocurrency, a layer 1's market cap, coming up with a sort of a coefficient or a constant in order for us to value and compare different blockchains' valuation metrics purely off of how many active wallets there are in that network. We'll talk about it a little bit more in the Discord. So thank you all so much for